Here's the balance sheet. Here's liability section. Here's non-current liability. Bonds payable. Inception. X2, X3. It's all January 1. X4, X5, X6, January 1, X6. That's exactly 5 years from today, right? How much bonds payable? 100K. X2, X3,
Same.
X4, X5, X6,
0.
right? X6. But we are creating companion account at the inception. We have created companion account, pair account, right? What was the beginning?
10.
You said it's a contra, right? So who is he? Discount on bonds payable. He is companion of his wife called bonds payable. He cannot exist without his wife. An opposite gender. Bonds payable is under non-current liability. That means what side?
Credit side.
Credit side. So discount on bonds payable is debit side. So do I have to do this? Right. At the inception. So what's the price of the bond we issued at?
90.
Right. Correct number is 93,137. Okay. So please don't get me wrong. Okay. But it's easier for me to show you. So what is the 90K represents?
Cash received.
Cash received today, but that's also called present value of all future cash flows, including principal 100,000 and
Interest.
periodic interest payment of
12,000.
12,000, which computed by using 12%. But how did you compute this 90K? Using 14%.
Market rate.
Please do not confuse. So this is called net carrying value. Remember depreciation, we talked about net book value? Now it's net carrying value. Do you remember accounts receivable we called net realizable value? What's the accounts receivable companion account? Anybody remember accounting 1A? Accounts receivable. What's the accounts receivable companion account? Accounts receivable minus the cushion reserve. Anybody remember?
The allowance for bad accounts.
Allowance for doubtful account. Very good. Allowance for doubtful account. That's a net amount. All right. How about depreciation? The machinery, equipment is the account. What's the companion account? Accumulated depreciation. That's the contra asset account. You come up with net amount, subtracting each other, net book value. This one is contra liability. Because the boss, wife, is the liability, credit side. Therefore, this is debit side. All right. So now, what do? Journal entry every year. I'm sorry about this mess, but interest expense 14K using straight line. Discount bonds payable. How do you get 2K? Can somebody verbalize one more time?
The extra interest expense.
Instead of 12 and 14%,
12 and 14%.
10K for typing?
10.
That's right. So total extra interest expense you have to incur. Please read my lips. I said total interest what? Expense. I never said interest payment. At home you will say, well, you said wrong at school. I never said that interest payment. I said the total life of the bond, 5 years. Total extra interest expense you have to recognize. Who are you?
Issuing corporation.
Issuing corporation. I just worry about that you are confusing between the two parties. Right? You are the corporation. You have to recognize it. I said that you have to pay for it. It's 10,000. What's the life of the bond in this case? 5 years. Divide. What divided by what? Now? 10 divided by 5. 2. Okay? 2. So you're doing the same journal entry how many times? 5 times. So would you please show that over here? So one number this will be Amber. Year 2.
It will still be 10K.
8.
You just did this journal entry.
So 10 plus
8.
8K.
8K, just like that? Is it increasing or decreasing?
Decreasing.
It's increasing. Increasing. It's a debit side balance. You are crediting.
So it's increasing.
Increasing by 2. Right? Mathematical. But decreasing by the credit side.
This is so confusing.
I know. 92K is alright?
Yeah. If somebody's trading in stocks, do they need to know this?
You're talking about stocks now?
Stocks,
That's
I mean
it.
bonds and stocks, and somebody's trading in that, then they would need to know this thing.
The issuing corporation, they better know this inside out. You have to record this. Right?
You mean 2K, right?
Why is that 92K?
Because I'm answering your question at the same time I'm doing this. Is that good enough answer? So finally, who is dying? Husband is dying because he doesn't have any reason to alive, right? Wife died. I said companion account. He only exists because his wife exists. So they both die. He should have died, right? Because bonds are all paid off now. I'm sorry, Amber, if you think this is hard, I only did 50%. This is all incorrect. Why? What did I say today at the beginning? Heavenly value. Heavenly value.
Compound interest.
That's right. So it's not like this 2, 2, 2, 2, 2, going left to the right. Do you see that? Why I said that? I put it as a preface. So I want you to understand that. So what would be the correct way? That's the only correct way. But here's some consolation. As we said, if the difference between the two methods, straight line and effective method, is not material, they are willing to accept straight line method. But big corporation, the difference between the two is tens of millions of dollars, unfortunately. So what's the effective interest method? Right here. So that's why I upload this on the website. So I knew time is going to be running out, so it's right here. So Starting point, all right? Instead of 90K, 93,137, right there. You don't have to write this down, right? I uploaded to Pager for you, right? So that's the starting point. Okay, so here is the starting point, 93,137. That's the starting point inception. Multiply by what? Now I'm going left to the right. I'm going to the future direction, so present, right? So left to the right. 93,137 multiplied by what? 14%. I know you're going to say 12%. 12% is right here. 12% of 100,000, right? It's never change, right? That's a periodic interest payment. That's a cash. We are not talking about that. We are talking about what? We are talking about going left to the right. The 5 years, at that point, how much are you expecting?
100,000.
Very good. What's your starting point? What I'm saying is it's not going to like this. 90, 92, 94, 96, 98. I wish that's the case. But because of time value money concept, that's not the case. How come? Because this amount will become what? 14%. Okay? I'll show you now. It's hard to show you without this schedule. So it's called amortization schedule. 93,137, effective interest rate is 14%. That's this number. I did the calculation already for you, so you don't have to punch in your calculator. But how much you are paying, regardless? 12,000. So what's the difference between the two?
Discount.
1,039 instead of 2,000. Remember we did 10 divided by 5 and 2,000, 2,000, 2,000 for the simplicity's sake. But that's not correct because we are ignoring time value of money. Here is the correct way. So now you are adding that to the principal. Because you didn't pay that. You only paid 12,000. So you have add back to your principal. So your principal is getting bigger. Now, another year, this number, now the carrying value is bigger. Bigger number multiplied by same percentage, you will have bigger number, am I right? If you have the same percentage multiplied, but your principal is getting bigger, you will have bigger number as the product of the multiplication, right? So 94,000. But you only paid 12,000, so the difference between the two, you are adding back. So now even more. Multiply by 14%. Now the bigger product. The difference is bigger. Adding the number, now it's 96. Multiply by 14%. You only paying 12,000. The difference is now even bigger. I'm talking about amortization. Instead of doing 2,000, 2,000, 2,000, 2,000, I know that's going to come out to, 10,000. So, the last one, 100,000. So at this point, the red lights are blinking. What does he say?
Pay me.
Pay me, pay me, pay me, pay me. Debit, bonds payable, credit card. That's the end of life. So this is the correct way. How do I know that's the correct way? Because look at this. How much you paying? Total 60. But interest rate is $6,000 more because $6,863 more than actual interest payment. Why? As a recap, why? Can you say?
The extra cost of borrowing.
Right, extra cost. So that's the difference between 14% and 12%. The 2 percentage points that create the extra interest expense to be recognized for that corporation.